Let's see now financial data. And first of all, profit and loss statement. A profit and loss statement, also called the income statement, is a financial statement that companies use to report their income and expenses for a year. It's important to notice that this document is based on revenues and expenses when they are incurred, not when money actually changes hands. A profit and loss statement shows whether the company is doing or not profits on net. The top lines of this statement, the operating revenues, show how much the company has sold. After that, we can find the operating expenses, for example, the cost of purchases, merchandises and raw material, the wages and social costs, and the amortizations. We can find after that interest, interest expense, and after that extraordinary expenses. The final result is net income on the bottom line, showing if the company is profitable or not, profit or loss. Then we have another important statement, the balance sheet. A balance sheet is sometimes also called a statement of financial position. It provides a snapshot of the financial situation of the company at a particular point in time. This financial statement details your assets, liabilities, and equity as of a particular date. Assets are listed on the left side and liabilities and equity detailed on the right. It's important to notice that the left and right sides of a balance sheet are always in balance. In other words, the total amount is always the same for each side. Assets are all the means owned by the company and used to operate the company. We can find first long-term assets and then, after the fixed assets, you can find current assets such as stocks and accounts receivable. Then, of course, you find company cash and cash equivalents. Finally, total assets are tabulated at the bottom of the assets section of the balance sheet. On the right hand, you find liabilities and equity. You will find first owner's equity, funds brought by the business owner or by the shareholders. Liabilities reflect the resources found by the company to finance its patrimony. This includes loans on long term, and after follow current liabilities, more on the short term. Total liabilities and owner's equity are totaled at the bottom of the right side of the balance sheet. Remember, the left side of your balance sheet must equal the right side with owner's equities and liabilities.